Welcome to Dave and Dom Demystify, a FinTech Futures podcast, helping make sense of the world of FinTech and digital finance. Please sit back and listen as the two Ds take a subject and discuss it to make it clearer and easier to understand.
Demystifying. Welcome everybody to this show, and today we're welcoming back Ed from Bud. Ed, great to have you with us, and we're talking about a topic which I think a lot of people are very interested in at this moment, and I'm going to do the word injustice by not being able to say it, but agentification. There we go. If I slow it down enough. So we're talking about agents, and I was really interested to talk to you because I think from what I understand, Bud has got a few agents which you're using, but I think you've got a kind of insight and position on agents, which I think is worth listening to. So should we just dive straight in? And it'd be great to give us, to begin with, a sense from you of what agents are and how they work.
Well, look, awesome to be back. Happy to talk about agents and agentic stuff. So I'm blue in the face, so happy to do it. It's a pretty wild future that we kind of see. I think like for us, it was just over a year ago, we kind of started to think about, obviously we've been building AI in financial services space for a number of years, and we started building some models in around 2018, and then those models became quite performant around 2020. And that was based off of some breakthroughs in sort of AI research, kind of led by Google and things like that. But we kind of obsessively tried to be kind of 2 steps ahead in terms of technology. Sometimes commercially, that's not always the best thing. It's like financial services, as much as I love working in it, tends to lag the technology industry by quite a bit. And that's due to a number of reasons, like regulation and risk appetite. But I think when we saw the world of what we call like agentic models, we thought like, okay, we need to start thinking about like how Bud plays in this world. And we believe we had a real right to play in the world, given that we built these language models for financial services that understood and comprehended customer information. So the reason why I give all that backstory is like a sort of differentiate the difference between like agents and agentic. Like agents, what we call agentic models today, I think everyone will just know as like generally agents in the industry. But right now, it's worth like discerning what the difference is, because we've all kind of played with types of agents. We've all, hopefully all played with Anthropic, or for amazing for coding, like incredible for that, like being able to drop in files and do all sorts of crazy stuff. Or like OpenAI or sort of ChatGPT for like general purpose questions, and there's a lot of expansion in their services there. But we still consider them to be like agents and not agentic, even though these companies are working on agentic stuff, it's worth saying. And they're agents because you ask it some information, you ask it to do a task, and then it will come back to you and it will say, okay, like I've done this task, which the knowledge base and the ecosystem it's accessing is just within its own platform. So where it becomes different, where it becomes agentic, is imagining asking OpenAI or ChatGPT or Anthropic to say, hey, I want to build this application. Can you build this application that does this functionality and deploy it for me live online in the cloud? And to do that, it would be accessing lots of different systems that exist outside of OpenAI's ecosystem, and it would use lots of different models that can go and perform tasks. And so what the agentic model is doing is basically you're asking it a general question. In our case, hey, can you improve my finances for me? And then the agentic model is interpreting the task you asked it to do and going out and doing a bunch of stuff across using lots of different tools that exist. So you could ask it to go and book you a holiday, and it could book your flights. It could like check your calendar to see when you were free. Maybe go and access your partner's calendar. You're given access to that. Maybe it would go into your HR system and try and book the time off for work. It would book the hotel, all those kind of things. Obviously, there'd be some feedback loops saying like, here's the things you can do, yes or no. Do you like this? Do you like that? It might be able to access your bank account and discern the budget. So it's basically taking general purpose tasks and performing a whole bunch of actions, typically like on websites. And so the aha moment, what I'm trying to get across to like bankers today is I think they feel they're protected in the world in the sense they have these sort of controlled ecosystems within their applications, whereas agentic models can go and use the internet like a person. And so if I ask an agentic model, improve my finances, obviously within the realms of it coming back to me and asking for my permission to do certain things, it could go out and take my information and sign up to a new mortgage, sign up to a new credit card, and do all the boring things that us as individuals don't want to do. But of course, we should be looking for a new mortgage like every year. We don't do it because, well, I mean, I certainly don't do it because it's annoying.
That's insurance the killer for me, to be honest.
Yeah. That insurance is horrible. Yeah, that's a horrible thing. Again, like for the last 3 years, I'll admit this, I've just accepted the new rate they've given me. I shouldn't do that, but I do it because it's just admin and I don't want to do it. So the real breakthrough in these agentic models is like performing those admin tasks. And actually, bigger question is like, you think about your apps on your phone, they're all performing little functions for you in your life. The true like sense of an agentic model is something probably that sits on your device from an Apple or Google, whoever it might be. And they're just accessing all these systems and just doing things for you. And so like changes the interface, changes your experience. So the question I'm trying to pose to the bankers is like, how do you exist in this world? Where are you going to be? And like start to show them some of the technology and just show them it's very real. We've built some of these stuff and it can do some pretty cool financial tasks.
I was just going to say, I mean, what you're describing sounds like conversations Dharmesh and I have been having, but it sort of feels a bit more slightly futurology rather than here and now. The principles you describe are really good. I mean, I love the word you use, which is around admin, because it immediately, I think, brings to life what the potential is. But it feels like slightly out. So, I mean, what you're saying is you've already built some of these agentic models.
Yeah. So what we've built today, and I guess a way to describe like what are these things we're building. So you've seen, or like a lot of the AI companies as part of their research processes, even before they launched their LLMs, they were putting out these like, OpenAI put out this paper, it's policy proximal optimization, which to take a boring paper and actually put it into sort of a world that people understand. You've seen these AI models that can go and play computer games. They can beat anyone in Dota. Like beating someone in chess is like kind of table stakes now. It's kind of easy for a model to do, right? But like it can go and play any computer game. It understands the computer game world in which it exists in, whether it's Minecraft, and it can go and build things. You can give it these reward functions to go and teach it how to win. And you basically, it's a supervised learning process. What they did, for example, with Minecraft was the research team at NVIDIA went and took a whole bunch of videos off of YouTube around people playing Minecraft. Because like with Minecraft, there's no real way to win the game. It's just like a continuous game. But it kind of understood, they gave it some reward functions and some things to do. And then it gave it a training set of all these people playing Minecraft on YouTube. And then it figured out through an API, like, and it had an API into Minecraft to like interact with that world. It figured out how to play that game within the reward structure it gave them. And so for us, like an example is the reward structure is, here's a person's finances, here's their bank accounts, here's like all the data, the information that the customer, or in my case, in people at Bud, we've given it access to our finances. And we said, okay, based off of this, your reward function is like, get me more money in my account. Make sure I have more money in my account at the end of the month, at the end of 6 months, the end of 3 months. And that's a reward function. And the things that it's able to do is like move money from A to B, B being like a higher yielding interest account. And then you can model it versus if it didn't do those things, what would my account be? Because like the nice thing about account transactions and spend is it's a time series. So you can take a time series with and without, and you can see what the outcomes are. And like we've done that. It's suggesting actions to us today. It's like it's not 100% ready for prime time, but we're moving. This has been about a year project. It can do it. It can do it. So like it's happening.
In terms of your platform, what do you think holds it up the most? What would make it exponentially better? Is it more access to data? Is it a smarter model? Is it open finance? Because I would imagine you want to get data from sources that are behind other people's closed doors in effect. So what do you think are the magic ingredients for getting exponentially better?
For us right now, the biggest question is how the risk tuning we put onto it. So right now it errs on the side of like, don't do anything. And then the big challenge for us as well is from a regulatory perspective, we have lots of other systems that feed into it and models that say like understand person's finances and blah, blah, blah. But it's still a little bit of a black box around like why it decided to do that exactly. Like you can discern why it might be, but you don't know exactly. And so from a regulatory perspective, I think that's a question. There's still a lot of fine tuning to make it better. And I think that's just time. Like if I look at the Slack channel with our AI research team talking about like, okay, we ran into this problem, maybe we adjust some of the reward functions and this kind of stuff. So it's more like just making sure it's repeatedly more accurate for us. And I think that for us, that's just research testing. We have lots of access to data. That's not a challenge because, again, we have this ability to understand the world, how it played out today. And we can pretend and play a game with the model to say, okay, it's 2020. You have my financial data, make it better than it is rewarded today. And we can see the differences there. So it's just time and research for us. I don't think there's any technology breakthroughs, maybe some know-how that we're learning and that probably is being learned across different private companies today, but it's not necessarily shared. So maybe as some of these models become more open sourced, maybe the Meta team builds some agentic models in the open source and stuff, maybe there'll be some learnings there that we can use.
Again, it's really interesting that you're one of the companies that is kind of looking at this. It kind of is an extension of the work that you've already done. The reason I'm saying that is this is sort of flexing the muscles you have already, isn't it? Rather than starting from ground zero. Dharmesh's question is a great one because it's sort of like if you start thinking about what the gating factors are, I think experience is a gating factor, isn't it?
Certainly.
And the mistakes that you've kind of made historically, I'm sure there's been hardly any, but it all kind of feeds into this, doesn't it?
It's an engineering process, and maybe now it's a scientific process, which is also like test and learn and like things break. The best analogy of that is like look at SpaceX versus NASA, right? Like if you're willing to break stuff and mess things up. The challenge is obviously as regulation is like the challenge, and the nice thing is we don't have to launch rocket ships to see if they explode. We can just simulate the world because it's actually, our world is not as complicated as, from a financial perspective, it's not complicated as the real world. So we're like quite lucky in that regard. But yes, I think, again, gating factors are know-how, like systems. Like if we wanted to replicate and start from scratch, the systems that we've built to enable this, it's taken us, like we've been around since 2015. And so there are so many systems we've built that layer into this. And then it's having the team, right? Like it wasn't a year ago where we were like, okay, let's do this. Let's hire the team. It's the same data researchers and data scientists. We got very lucky in 2017 with our first data science hire. Like it's the same person that is leading the team today, and they're incredible. Yeah, so it's having the team and having the know-how and having the technology platform to enable you just to press go when we wanted to start going.
And just in terms of scale and stuff, I mean, how big is the team?
The core research team is about 5 people, and there's a whole bunch of engineers that sit around it. But if we think about this model, so what our model has done today is we've basically simulated the world of financial service. Like before this, we had models that like we could pull and say, how much income does this person have? All this kind of stuff. But we hadn't built like a full, if we think about like building that world of sort of simulating within our platform, the world of financial services, we've simulated sort of what you call like vectorized the transaction space. And then we've encoded individual transactions with over a time series and like understood that world of financial services. There's things that the model doesn't yet know. Like it doesn't know about all the financial products that exist out there in real time. And so that's a whole other thing we'll need to teach it. Because right now it's just like move money from A to B or B to A over time or B to C and things like that within like 4 or 5 accounts that I have. The next thing we want to look at, and this is definitely a next year, halfway through next year, is like the next 2 pieces of technology we want to add are the ability to, that we want to, so we taught it about this money movement thing. We want to teach it about the market of financial products that exist and maybe like a limited set. We're not going to say, okay, here's like, you can go trade. It's just too much complication. It's not. And there's other people that are focusing on that. And then the thing after that, we want to give it access, the tool we want to give it access to after that is basically the ability to use the internet. We haven't given it access to use the internet yet. And our theory is, that is definitely being built by a lot of other companies right now. And so there'll be some tech company that's just doing that. And then we can add that into our agentic model and we can add that in as a tool it can access.
Gosh, fascinating. You kind of alluded to it a bit earlier on when you said that you're kind of trying to get the bankers to understand this. Dharmesh and I, we met, as we love to talk about, over the sort of earliest iterations of internet banking. And I was so convinced that this thing called the internet was going to change everything. I completely could see the future. When you think about this and you think about the future, can you sort of see it? Can you taste it? And then those interactions with the bankers, what do you sort of feel that they're thinking about all of this?
Certainly there's like a defensibility point, right? And I think that's financial services industry. So first of all, like my general approach to all of this is like, we want really healthy, great bank. Like we want banks, and like there's loads of economic reasons why we need banks to be good and healthy and not have them to have sort of like all these like deposit issues that they may have. So I think there's a defensibility of like, okay, well, let's say this is true. And when I'm on the West Coast, which I've just spent the last 9 weeks doing, and I'm speaking to all the tech companies out there and tech suppliers, everyone's going, yeah, of course, everything's going to be agentic. There's just no question. Now, how long will that be? And so that's not just talking about like us as consumers, it's talking about like in organizations. So in the bank, how do they run the bank? Imagine a number of different models that are like doing different things that maybe in the medium term, it will be a person plus an agentic model, an agent, and not agentic maybe. And then those people working together to create better outcomes. And then going, okay, actually like we can connect A to B without the person in the loop. We can just do that as a function, and that person can then monitor the A to B thing rather than monitoring system A and system B and go, yeah, like they're working properly, like those things together. So it starts to like allow systems to talk to each other in much smarter ways. So there's a big issue for how you run the bank. I think there's a huge opportunity to build a bank from scratch. The same way, as you said, when telephone banking came out and you built First Direct, and then internet banking came out, and then mobile banking, you know, you get the Monzo, the Revolut, those kind of people. Well, like I think there's a new opportunity, which is like agentic for customers and agentic for how you run your mid office and back office. And so I think it's probably like a 2 or 3 year thing to get to where we're going to be.
2 or 3 years sounds pretty scarily close, to be honest. So,
but not for like, it's not 2 or 3 years for like, that's how JP Morgan's going to run and that's how HSBC and Barclays are going to run. I assume so. I think you'll get an incumbent being slower, but you'll get agentic bank app coming out, which maybe can take a couple million customers and then everyone else catches up or something like that.
But do you think that the incumbent banks have a distinct advantage over the neobanks? Because if I look at like Monzo and Starling, although they've got a great experience, they're literally only banks with a history of maybe 7 or 8 years of customer data, 2 or 3 products. Whereas if I look at Lloyds Bank, it's been running for over 200 years. They probably got data on systems for at least 30 years, if not more, and across almost every product set. So with that kind of leverage, I guess, surely when they comes to agentic platforms, they've got a distinct advantage over the neobanks to help people manage their monies, no?
I wouldn't say that's necessarily true, given the nature of like access to data, effort. So you're going to need to really focus on this. And so rather than having like a team thinking about it sometimes, from the top down. And I think we've moved away from this world of it's all about more data. The kind of big data world isn't necessarily true. I think having 30 people's data, having holistic access to the data and having really great systems and great people to build on that is probably an easier problem to solve to get to MVP rather than saying, okay, we've got like 10 years of 20 million people's data and like, that's your starting point. And also I think the world of buying data is very real. So you can always go and buy a bunch of data too, which is, something, a whole nother world, which we don't need to get into.
But it does come back down to resources though, no, surely? Because we recently spoke to Lloyds Bank and everyone talks about the Neos having great customer experience, but Lloyds have got 350 people working just on designing experiences. They've got 22 million people using their mobile app. So that kind of scale must be.
But do you think Lloyd's banking experiences with 300 people working on it is better than a challenger bank today? Like, I certainly don't think so.
I think the differences are marginal.
Definitely. Thing. In time, yeah, absolutely. And so like, I don't think the big banks, it will be a huge issue for them. I think the more existential crisis is if somebody creates a really amazing agentic experience, do they even ever need to speak to them bank, the customer, directly? That's the big thing. Like, do they even need to know that it exists?
I mean, I was going to say, because eventually the customer of the bank may not be a person, it may be the agent. So
yeah, and they have no allegiance.
No, I think if you've got agents sort of there to optimize the world of your finances for you, I can see it very strongly, the appeal from a kind of customer side, if we sort of evolve into our mindsets into that. But it creates a massive challenge for the industry, doesn't it? Because the industry is built on inertia and people doing what you described, which is just sticking with the rate that they've got. But if I don't have to worry about that, some software is doing that on my behalf, it kind of changes the entire dynamic of the industry. It's interesting because I've downloaded Apple Intelligence, which I think is far from intelligent, but I did notice that there's Apple.
No comment.
I did notice there's Apple Cash in there, which obviously we can't get in the UK, but I've had to set it for US settings.
I've got a US phone for that reason. Yeah.
When you just go, wow, I don't know. Apple is becoming more and more of that interface. It's got access to information. It can do the things you describe in terms of dipping now through the opening up of the apps themselves, dipping into apps. So, its capabilities potentially to pull all of this stuff together makes it a really powerful interface to all of this. And that's not to say that somebody else won't come up with the smarts to do it. But I don't think the banking industry really knows just what a big change this could be. So,
yeah, I think there's some smart people in all of the banks. It's just how far removed is the people that are focusing on this from employee like 10,000 and 20,000, right? And that's the inherent challenge that you have at some of these larger banks. I still believe in the trust of brand. Like if an agent said to me, hey, move all your money from your Barclays account, which I've had since I was a kid, and move it into like the Dave Bank. Yeah, they'd like, or maybe Dave's a bad example.
Yeah, they've just got in trouble, so don't move it there.
That's a bad example, but whatever it is, Whizbang Bank, then I'm going to be like, I don't know about that. I think I might be okay for now, but like find something else to do, which is less risky and might be also beneficial. So I think that they have that advantage, and we've seen that through neobanks. I kind of predicted the death of consumer relationships with banks when open banking came around, and that was not true. But I think your point absolutely nail on head, Dave, is the inertia piece. Open banking was actually still a lot of inertia. Like it was like, go through this flow. I don't really trust it. But certainly the access to data through that will power a lot of this stuff.
I know the focus tends to be, as usual, on the consumer, but can you tell us a bit more about the bank side of your platform? Because, what is it actually doing? Is it actually going to replace staff, augment them? Typically everyone says it's going to augment them, but what kind of things can it do that excels beyond human capability?
The biggest part of what we do at Bud is this transaction intelligence, and then leading up to this product we call Drive, which is really an AI data analyst platform. It's a data analytical platform that the bank can have. This is, by the way, when I say this, it's probably people are going to say, well, all banks have this. And the shock is very little banks have this, which is very surprising to us. Is that like what Drive allows a banker to do is basically access insights on all their customers' data in real time, and not necessarily access their data. Like we can't do that. They can't do that for security purposes. Like no one wants that, which is probably a nice thing if you're a customer, like people aren't messing around with your data. But what they're able to do is they can either like manually go like, okay, show me all my customers who have a certain amount of deposits, who go traveling once a year or go traveling more than once a year, and use buy now, pay later. Because let's say they want to like launch a travel credit card. So like maybe that's what they decide. So it can then look through all the transaction data of all the customers and then create a segment of those customers. And that's data analysis and data analytical work that would take maybe like weeks, because there's layers of systems that we're leveraging, like our enrichment, which takes every transaction, understands every transaction, what it is, what it's for, where it was spent, all that kind of stuff. Because it might be abroad, we might like be able to identify like other merchants. So it pulls all those together, segments those customers, and you have a customer segment, you can message those customers, or you can put them into some sort of campaign, something like that. And so what we're now doing before the world of agentic stuff is based off of how the bank is using those systems or the products and services the banks are trying to push, we are using AI systems to identify customers and segments that would be relevant without that individual having to do that search. We're just saying, hey, by the way, a little bit like you get a recommendation system on anything like Netflix, but a little bit more complicated than their original recommender systems. I don't know about today how complicated they are, but probably pretty good. Here's some segments you might want to look at. Here's some cohorts that might be relevant to your objectives. And so for us, that's like a big step. And the reason why I'm saying all that is around the people thing. So we're working with a lot of small, medium banks in the US, and they're incredible customers because they don't have anyone doing this data analysis work today. So it's not replacing anyone. It's allowing them to go from 0 to 1. And so that in a conversation with banks is pretty simple. They're like, wow, this is something we couldn't do before. And now we get a license to your platform, we can do it. Because before we'd have to hire a bunch of people, train staff, label the data, be a huge thing. And so for the bigger banks, they have like thousands of data analysts. And actually, we're getting engaged with them more and more now as we're kind of building up more customers using this product and getting the ROI and stuff. But like the initial, hey, by the way, you could do all this. It'd be way simpler than how you're doing it today. I think it was going, for those banks, it's going from 1 to 1.2. It's like slightly less appealing. I think like going from 1 to 1.2 will certainly enable a lot of people. It's just trying to prove out those use cases. So the reason I say all that is we haven't seen any of this stuff replace anyone yet today. But as you imagine, you go from 1 to 1.2, maybe those people can do more, or of course, you can do more with less. It's really up to the organization. But I can tell you one thing, everyone's looking for top line growth. And then secondly, they're looking for optimizations. So I think it's really about balancing those two things. And that's down to our customers more than predicting which way they'll take it.
Do you think that you'll get to the point where you can say, design me a product that's extremely profitable for the most, number of people in my client base?
Yeah, definitely, for sure. And I think that comes down to individual pricing, because banks don't really do individual pricing right now. They do it like cohorts. So I think that could drive profitability. And then getting to those individual customers, we've heard it costs the banks thousands to create a segment of thousands of people rather than like a segment of one. And that's totally possible.
But I guess it's not the personalization part of it that's kind of difficult. It's almost like, let's say you give me a rate of, I don't know, you charge me 5% for my credit card and you charge Dave only 4%. Mm-hmm. How do you explain the difference? If I come back to you and say, well, hold on a sec, Dave's getting 4%. Why am I getting
He has more books. He has more books than you.
Yeah.
So, yeah.
I mean, part of my brain thinks that where this ends up is the whole financial services industry becomes an irrelevance, because if you've got optimization internally and then optimization externally, eventually you reach a point of complete status quo, surely.
Perfect information.
Yeah, one thought. Another thought is, if you're able to create a product for one inside and I'm representing someone on the outside, then it becomes like a barter between the agents, doesn't it? So that, again, that's a difference from today in terms of, here's a product, we'll punt it out to thousands of people or whatever it is. Whereas what you then got is very much a bespoking going on, but I presume in milliseconds rather than the 3 months or whatever that, it would currently take. And
yeah, I think there is a world in which we're moving towards, could be, could not be, but we're moving to a world of optimization and abundance, total abundance, and through robots and AI and all sorts of stuff. And you look at like Starship Enterprise, like there's no more capitalism because everyone has access to everything.
There we go.
Yeah. And I think for us, we're building for the world in between, right? Like I think the state in between, which is hopefully going to at least last 100 years.
I really take your point around trust as well, because we're also then entering a world where trust is going to be a massive thing in terms of what we do. And because again, what you're describing is a world, there's an autonomy going on, but it's directed autonomy. So it will come and ask your permission to do it.
Of course, has to. Yeah.
I think that still requires a leap of faith from the consumer.
Definitely.
And so very interesting. Well, listen, we're well over on time, I think.
Sorry.
On this, but no need to apologize.
It kind of highlights how interesting this topic actually is, Ed.
Yeah, it's kind of crazy, but taking it back to reality, like we're still taking baby steps to making these models, some of these early models ready for prime time. So we have at least 6 months.
I guess all of the big tech companies they're pivoting towards agents as well now. So, it'd be kind of interested to sort of see how all of this plays out, basically.
Yeah, they're building a lot of foundational technology. And like we use Gemini embedded in some of our data analysis tools as ways to do lookups rather than doing like a code-based lookup or something like that. And then for the customer front ends, like there's more and more technology that's coming from all sorts of people like Google and others that will be used for the front end stuff. I think where startups have an advantage is sort of twofold. Is one, like being really vertical specific and touching things that I know some of the big tech companies don't want to touch because it's too risky for them, such as financial data and regulation. If I'm Google, I mean, I'm not speaking for them, I don't know this, but just as an example, or I'm Apple, I maybe don't want to go anywhere near financial regulation because I'm so profitable without going there that like as soon as I go there, I get triple the regulation they have today. Maybe the margins aren't as sexy as what they have today by just sitting there and being the platform. So I think there is like, that's where the opportunity is in these verticalization, there's higher risky things. And then access to private data that we get access to and through private agreements that other people do not get access to. And that gives us an advantage as well.
It's craziness. It's really, I mean, my brain's just sort of going off at many different tangents. Like you can actually imagine the regulation, which it is already, but it becomes a strategic imperative for a country to get ahead of this stuff. So,
of course,
if you can squeeze out efficiencies at a kind of country level in your citizens' finances, that then puts you in a better stead on the global stage, So, I mean, the ramifications of this are enormous, but anyway, on that note, thank you so much again for chatting to us. It's really good just to kind of cut through the BS, I think, on this and talk to a company which is actually really looking at it with a pedigree in terms of using customer data. So thanks, Ed. Really appreciate it.
No, it's a pleasure. It was lots of fun.
Thank you for tuning in to Dave and Dom Demystify. We hope you enjoyed the show. Don't forget to like and subscribe and tune in next time as we take another topic and demystify it.